We heard earlier from Evelyn about Xiaomi and how it has a potential to really overtake Tesla in China. What's your response to that?
Absolutely. If there's one candidate, for years everyone has headlines, oh, the Tesla killer, the Tesla beater. Well, Xiaomi is the real deal. They met, in fact, Lei Jun met Elon Musk 12 years ago in California. Elon handed over a Model S, and at that time, Lei Jun said, it's my dream to one day build a car that will compete with yours, and we have it in the SU7 products that are coming out now. They're phenomenal in every respect. So even the chairman of Ford Motor Company, the CEO, Jim Farley, drives one, and he said he's amazed at the product and really loves it. So Xiaomi is legit.
Okay, so Xiaomi is legit, here to stay. BYD, at the same time you mentioned this, they're really pushing out their cars overseas. I understand they've shipped like 90,000 cars in June, and they own something like 7 roll-on, roll-off ships as well. How aggressively are they pushing their global expansion?
In all my years in the business, I've never seen anything so aggressive as we're going to buy our own ships, we're going to put cars on those ships, and we're going to put them in markets worldwide, from Mexico to South Africa to Australia, the UK, Spain, you name it. BYD's there. They're pushing really hard. They hope to export almost 1 million cars this year. That's up from almost nothing 5 years ago. So they're firing on every not cylinder, because they make a battery-powered vehicle, but they are going all in to dominate the China market and expand globally as fast as they can.
Is this export strategy just a BYD phenomenon?
No, you know what? We're seeing the Chinese, ironically, if you compare it with Japan and Korea used to make their money in their home markets and then buy market share by pricing very aggressively overseas. China's the opposite story. More or less, everyone's losing money at home, and they're moving overseas in order to capture some profits. This is why the U.S. market is so important to them and why they want in and why U.S. wants to keep them out. And so look for the Chinese automakers to throw most of their priorities toward the European market, where they can make margins, make profits. That's their oxygen, if you will. If they stay home, they're going to drown in overcapacity and losses. That's the bottom line.
Okay, so Michael, you say Europe is wide open. We've seen huge growth so far in countries like Spain, Italy, and the UK. Are sales in these markets on a sustainable uptrend? When will the Europeans start noticing that, something is wrong and start clamping down on Chinese EV imports?
Right. They have begun to notice, and late last year they put in place some tariffs on EVs. The Chinese very cleverly said, oh, the tariffs are on EVs. We'll ship PHEVs and gasoline products, which are not subject to tariffs, and those are the ones that are growing. So the Chinese have many different kinds of products at different price points in their arsenal, and they've pivoted to the ones that are not subject to the tariffs. And as a result, Chinese brands as a whole now capture about 8% of the European market, way up from just a few years ago.
Okay, so Michael, we know that, and we've been talking about, there's just so many EV cars on the road right now.
Yes.
Consolidation is going to be key. Is this going to be state-led? Does something have to happen, a big crisis, before the government comes in and say, let's just try to consolidate and rationalize the sector? What do you see happening?
Possibly, and this is conjecture, but one thing we know under Xi Jinping's leadership, he doesn't want the state enterprises to go away. So one could envision a situation where if one of these startup EV companies get into real financial duress, then he'd direct SAIC or Chang'an or Beijing Auto to come in and make them part of their group. That might be the solution. But consolidation is like that magic just over the hills that we're going to get to eventually, but we don't seem to be able to do so in China because of the way it's structured, the economy.
Okay, so who's in the best position among the Chinese EV makers to survive and thrive in this so-called consolidation and chaotic phase?
Yes, so if I could give the big three, let's start with BYD, would be the #1 bet. Xiaomi would be second. And then the Geely Group, which includes the Volvo brand, Zeekr, Lynk & Co., Polestar. Look for them. They're tenacious. They stick around. They'll find a way.
And which names are the most at risk?
Most at risk. Wow. Do you have a half an hour? Because there's
Always,
a long
always,
list of companies at risk. But I would say today, the company that is most talked about is NIO. Great product, excellent technology, swapping batteries, doing all the right things, but they spend a lot of money, and that worries investors.
Okay, so when it comes to Chinese EV makers, you've got to ask about local governments propping up homegrown champions. Is that likely to happen?
Yes, take NIO, for example. In the first quarter of 2020, they were days away from bankruptcy, and the Anhui government extended them an emergency $1 billion loan to let them live another day. They've recovered, but hey, here we are again under pressure. Will we see the Anhui government step back in and say, okay, here's another $1 billion. We don't want you to go under.